Ladies and gentlemen, good day and welcome to H1 FY 2021-22 earnings conference call of Star Housing Finance Limited. Representing the management, we have with us today Mr. Kalpesh Dave, Head of Corporate Planning and Strategy, Mr. Anup Saxena, who heads the Credit and Operation Functions, Mr. Natesh Narayanan, Chief Financial Officer, Mr. Ashish Jain, Managing Director of STARHFL, and Mr. Rajesh Agrawal from Cleon IR. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Rajesh Agrawal from Cleon IR. Thank you, and over to you, sir.
Thank you, Bikram. Good evening, everyone, and welcome to the second quarter FY22 earnings call of Star Housing Finance Limited, formerly Acme Star Housing Finance Limited. On the call today, we have Mr. Ashish Jain, Managing Director, along with other members of the senior management team. Today's discussion may include predictions, estimates, or other information that might be considered forward-looking. You are cautioned not to place undue reliance on these forward-looking statements, which reflect company's opinion only as of the date of this presentation. Please keep in mind that the company is not obligating themselves to revise or publicly release the results of any revision to these forward-looking statements in light of new information or future events. I would also like to emphasize that while this call is open to all invitees, it may not be broadcasted or reproduced in any form or manner. I would now like to invite the management to share some perspective with you with regard to the company's operations and the results for the quarter under review. After that, we'll open the call to questions from analysts. Over to you, Kalpesh.
Thank you, Rajesh. Operator, am I audible?
Yes, you are, sir. Please go ahead.
Yeah. Thank you so much. Good evening and greetings. On behalf of Star Housing Finance Limited, I, Kalpesh Dave, warmly welcome you for H1 21-22 earnings call. We have with us Mr. Natesh Narayanan, our CFO, Mr. Anup Saxena, who is joining us as Head Credit and Operations, and our Managing Director, Mr. Ashish Jain. On behalf of STARHFL, wishing all our stakeholders very happy and safe Diwali. On this call, we will be presenting operational and financial performance of our company, and each of the speakers will talk about relevant, actionable, and achievements during the first half of the current financial year. Our MD shall be providing the closing comments. Post this, we would be happy to answer any questions that the participants may have in relation to STARHFL. Star Housing Finance has achieved the milestone of 100 crores AUM as of September 30, 2021. This comes predominantly by the growth achieved since October 2019, where we began our transformation journey to a professionally run institution and have almost doubled our loan book in 15 months of business operations, adjusting for the lockdown due to COVID-19 pandemic. The loan book continues to be built on the philosophy of providing housing finance assistance to first-time home buyers in economically weaker section segment, looking to purchase or construct their own home in semi-urban and rural geography. The book is now diversified with more than 80% of the incremental business coming from newer geographies of our operations, that is Maharashtra, Gujarat, Madhya Pradesh, and Tamil Nadu. In fact, the diversification is seen even in our customer type, where more than 1/3 of the incremental loans are coming from salaried customers. Our incremental loans are now getting sourced, processed, and managed in-house by HFC professionals in business, credit, and operations domain. Further, strong underwriting team at local and central level follow the overall risk framework that has been set up to ensure the growth is backed by quality. The gross NPA stands at 3.26% and net NPA stands at 2.77% as of September 30, 2021 on this book. Coming to the liability franchise, it has been strengthened to complement the growth and now enjoys relationship with 4 banks, 4 financial institutions, and National Housing Bank. The borrowing outstanding is at rupees 64.12 crores as of September 30, 2021. Further, strong pipeline through public sector banks, private sector banks, and financial institutions would enable AUM scale up. So we continue to invest in domain and technology in the first half of the current financial year. Staff strength stands at 83 employees and in fact, all of them have relevant HSC experience as per their roles and geography. Happy to announce the joining of Mr. Anup Saxena as Head of Credit and Operations. So Anup is a qualified chartered accountant coming with more than 15 years of experience in affordable housing finance space. Anup runs over here the mandate of strengthening the overall credit and operations function and also leads the co-lending vertical at STARHFL. With business activities in our geography of operations slowly coming back to normal post the pandemic and the lockdown, STARHFL, having weathered the impact of these two lockdowns in COVID-19, is now ready for business scale-up. In fact, more than 80% of the disbursements that we had achieved, these have been registered in the second quarter of the first half. And we are confident of increasing our AUM in the second half. With our collection and SCU unit led by Mr. Bobby Singh in place, we are confident to maintain asset quality through our AUM build-up journey. Finally, we are extremely happy to share that we at Star Housing Finance had initiated capital raise exercise, and our shareholders have approved the list of proposed investors subscribing to the capital through preferential allotment. In this raise, the company, subject to all necessary clearances and approvals, intends to raise 9.17 crores through 10.3 lakh shares, coming at 89 rupees per share with a face value of 10 and premium of 79 rupees per share. Post approval, full subscription and allotment, we would see the net worth of our company crossing 63 crores. This would enable achievement of our business objectives, including re-rating and developing a strong foundation for AUM growth. So with these actionables that we have achieved, now I request Anup Saxena to speak on the initiatives he has or is taking in his vertical. Thank you, and over to you, Anup.
Good evening, everyone. Am I audible? Operator, am I audible?
Yes,
okay.
Please go on.
So, good evening, everyone. Thank you, Kalpesh and Star Housing Finance, for giving me an opportunity to interact and communicate with the stakeholders. As a prudent underwriter and risk manager, I would like to make our stakeholders aware about the new initiative being taken up by Star Housing Finance in order to maintain hygiene and quality of the portfolio, reduction in overall end-to-end debt, making customer onboarding smooth through adoption of digitization, and last but not the least, making customer entire life cycle smooth and hassle-free through leveraging technology. Last 2 years were challenging for the sector, all inclusive of generation of new business and maintaining quality of existing book due to disruption caused by COVID-19 pandemic. We at Star Housing Finance Limited has been prudent enough throughout the 2 lockdowns and have managed to walk the talk customer. We have offered moratorium to our customers based on their request and have also provided any support to ensure they revert back to their original repayment pattern. In each of the lockdown, our customer efficiency dropped to 35 to 40% at the start of the lockdown and revert back to original levels at 95% plus at the end. This has validated the trust we have reposed in EWS segment and the fact that these home buyers have ensured the biggest investment in their life cycle, having significant skin in the game, would be committed to their repayment schedule post any disruption. We have adopted conservative provisioning policy as a part of our overall risk framework and have been cautiously writing off seasoned account that may need such treatment. We also have provided for a COVID-19 impairment reserve during the pandemic. The rich understanding developed from 1200 plus live accounts, out of which more than 50% were incremental loans, post initiation of our transformation journey, continue to shape up our credit policy, operation guidelines, and overall risk framework. We are in the work for developing in-house early warning signal and fraud detection mechanism by developing deep diving analysis on our customer segment and operational geographies. This coupled with FCU will help to minimize fraud and quick mortality and also enable us to be well prepared for COVID-19 like disruption in future. So thank you. And now I would like to hand over the call to Mr. Natesh Narayan to talk about financial numbers. Over to you, Natesh.
Thank you, Anup. Good evening, everybody. Happy to share the financial performance for the half year ended September 30th of 2021. Following are the highlights. We as a company have crossed the loan book of 100 crores. As of September 30th, we are at 100.38 crores on 30th of September 2021. The company has banking and non-banking relationship with SBI, Bank of India, NHB, UBI, AU Small Finance Bank, Hinduja, Mahindra Finance, Avance, and Mars Financial Services. During the period, the company received a fresh credit line of 10.3 crores from NHB and Hinduja. Interest income earned on the financial assets in the first half year is at 8.75 crores, and the financial cost stands at 3.06 crores. Annualized yield on the loans and advances is at 16.7%, while the finance cost is at 9.19. Excluding the credit lines from NHB, the finance cost stands at 10.7%. Incremental loans were disbursed at a weighted average yield of 16.5%. The company continues to invest in manpower and technology, resulting in an operating expense of 4.72 crores, of which employee expenses stand at 2.73 crores and other operating expenses stand at 1.88 crores. The impairment loss allowance is at 43 lakhs, including a write-off of 30 lakhs. The GNPA for the first half year of FY22 stands at 3.26% and 3.26%, and the NNPA is at 2.77%. The total expense for the period is at 8.22 crores, resulting in a profit before tax of 81 lakhs. Profit after tax for the period stands at 64 lakhs. The earnings per share is at 39 paise per share. Our efforts of capital raise have been acknowledged by the capital markets. We have received shareholder approval for the preferential offer of 10.31 lakh shares. Post successful subscription and related approvals and clearances, we shall see a capital infusion of 9.17 crores through the preferential allotment route. This capital raise is subscribed by retail investors and shall result in bolstering of our net worth and would help in getting re-rated and build up a strong foundation to further increase our leverage and help achieve business growth. With a strong pipeline, the liability setup shall complement the business objectives in second half of the year. We are exploring other instruments that would add to the term loan engagements, and these being NCDs, direct assignments, and securitization. The intent is to have a diversified borrowing profile and minimize reliance on any particular instrument or lender. With this, I hereby wish to conclude mentioning the following points. Net worth as of September 30th, 2021 stands at 54.25 crores, 0.2 times. The company is well capitalized, and further bolstering of net worth will create ample space to scale up leverage to reasonable levels. Our provisioning policy remains conservative, and this is evident from the fact that we have written off 0.3 crores of loans in first half. Cumulative write-offs since adoption of the approach has been 1.69 crores. In addition, we have also provided 1 crore as a COVID impairment reserve. The investment in infrastructure, manpower, and technology has created a capacity for monthly run rate of 15 to 20 crores, and this shall be utilized over the subsequent quarters for scale-up. With this, I call upon our MD, Mr. Ashish Jain. Thank you for your time. Over to you, Ashish.
Thank you, Kalpesh, Natesh, and Anup. Greetings to all participants. On behalf of STARHFL, I wish everybody very happy and safe Diwali. We as a nation have grappled with the onerous task of fighting COVID-19 pandemic and its implication on business activities. Housing finance space too got impacted, result in overall muted growth across the sector. However, the inherent demand drivers continue to remain extremely strong, more so in case of semi-urban and rural geographies where we operate. Reverse migration that we have seen during the pandemic has further increased demand for housing units. This is evident from the fact that whenever we started business activity, we were always back to our pre-COVID level in the first business month itself. This sector is once again getting the eyeballs of investors in capital markets at pre-2018 valuations. This comes as no surprise as overall housing sector continues to be a cyclical business specifically in semi-urban and rural areas, which contains more than 95% of the total housing shortage in India. Our capital raise and the retail participation shows that there is substantial investor interest in semi-urban and rural housing finance space. We shall continue to operate with same business philosophy of enablers of credit for first-time homebuyers in EWS segment in semi-urban and rural areas. With vaccination speeding up and intensity of the pandemic steadily coming down, we expect subsequent months to be normal business months. We shall come up with rural-centric loan products that will enable our customer segment to get their financing requirements in relation to their home being made at STARHFL. We look forward to have qualitative growth, and just as we have passed the milestone of 100 crores AUM in H1, we are confident of getting transformed to a mid-sized HFC with a strong presence in our areas of operations. I sincerely thank all our stakeholders, including employees, business partners, vendors, bankers, auditors, and last but not the least, our regulator, RBI, as well as the NHB, who have supported the company in its growth story. Thank you.
Thank you, sir. Should we now open the floor for questions?
Yes, please.
Yeah.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queues. To ask a question, please press star and one on your touchtone phone now. Participants who wishes to ask a question may press star one now. A reminder to participants, if you wish to ask a question, please press star one now. We have a first question from the line of Girish Gangawat from Derivative Chains Private Limited. Please go ahead.
Good afternoon, everyone. Thanks for the participation invite. So basically, I just wanted to understand that how has been the disbursement in terms of Y-on-Y and Q-on-Q growth, and also possibly in terms of how has been the business in the past quarter due to this second wave of corona, which has been triggering towards normalcy.
Yeah, so I will take that one, Girish. Hi, Kalpesh here. So in terms of our, disbursement performance, if I talk about the, quarter-on-quarter growth, we are coming from a very lower base from Q1 to Q2. And as I told you that, 80% of my total disbursement for the year has happened in Q2. So in that particular manner, if I talk about the percentage growth, it would be around 500 to 600% growth that we have achieved in the Q2 over the Q1 of the current financial year. Also, what is extremely important to note is the fact that the amount that we had disbursed in the second half of the last financial year. Generally, second half of any financial year continues to be good business half for any housing finance activity. Obviously, because of the rounding off of the financial year. So we have been able to achieve same kind of a performance in the first half of the current financial year. So H2 of the last year and H1 of the current year are more or less equal. So which gives us, great confidence and also validates our, business philosophy that there is lot more demand which is still left and continues to come from the rural and semi-urban space. Primarily from the fact that, there is a migration from rural areas and native villages to these centers. And also there is a reverse migration from the urban metros to these smaller cities where industrialization is shaping up and there is good deal of business activity that continues to go even during the lockdown or during the pandemic times. So as I said, there is a lot more juice and inherent demand is there in these semi-urban / quasi-rural areas, and that is what is reflected in a performance of the company like ours, where it continues to operate in the same. So having said that, this is what we have been able to achieve in the first half, and hopefully, the second half should be better than the first half. Traditionally, it has always been. Subject to any of the disruptions or anything not happening, we should be able to scale up meaningfully from here on.
Yeah, because as we expect that the festive season kicks in, and we have seen the number of real estate registrations in terms of being shared by different states across India have been gradually creeping up. So we understand that there should be a good demand for HFC companies also to grow their businesses. Or of course, we have the pandemic mode still in terms of trying to disrupt the entire flow. But festive season kicking in, registration numbers for the real estate, sales happening should be a good kicker for you for the second quarter, right?
That's right. For the second half. So, just to answer to your question, there, as I told you, there has been constant flux of demand at each of our locations. We continue to get good leads. We continue to get good login. It's only that, having weathered the impact of two successive lockdowns, we just want to calibrate ourselves going ahead and do meaningful in terms of business activity, not compromising on the quality part of it. But obviously, as you rightly said, the new launches and the kind of turnaround that is happening at these smaller centers of our operations, obviously there is much more to look forward to, especially during the festival times, that are coming ahead to us.
So how are we coping up in terms of a network of the number of branches, in terms of our growth trajectory that we are witnessing or that we are envisaging in the next half?
So we do have 7 physical branches, and we have 15 digital POPs attached to each of the branches. So when I say digital POPs, it's not just a digital presence. We have our own, staff in place on ground, and these are the fertile lands from where the demand, as I said, continues to emanate. Not just in terms of new launches, but also even the construction on own land or even the composite part of it. These people do look forward to build their houses on their own piece of land that they own. So there has been a substantial demand coming on the construction and the composite piece of it as well. Having said that, also would like to add to the fact that since more than 18 months, there had been literally a lull in terms of renovating their house, extending their houses. So that's where demand for the extension and improvement loans also getting picked up. And as our MD rightly said that we are planning to come up with rural centric products. So obviously there are a lot more sub products that to look forward to. One of them being conversion, provision of loan for conversion of a semi pakka roof to a pakka roof. Construction of toilets within the home. So these kind of small ticket loans, there is definitely a demand. There is definitely an upsurge, and we as a team on the business side of it as well as on the underwriting side of it are developing those relevant products to satiate the demand.
And have we seen any reduction in the cost of borrowing in the last 1 or 2 quarters in particular? The overall cost of borrowing?
Yeah, I would hand over the call to Natesh to answer that question. Natesh?
So, as I said, for this half year, hello, am I audible?
Yeah,
Yes,
loud.
Yeah. So, as I said, for this year, our cost of borrowing has remained steady at 9.19% on a weighted average basis. Given the fact that we have nearly about 25-26 crores of NHB refinance, so overall, if we exclude that, our cost of borrowing is around 10.7%. So it has been stable. There has not been any major uptick. And not any major. It fell in the last 18 months, but for this quarter, it has been steady.
Now, how is the liquidity position in terms of your repayments versus the operation in terms of the debt repayments happening on time, and the current level of AUMs that you have across the 3-digit number?
As we speak, all our repayments to our lenders and all the statutory payments have happened on time. There has not been any delay whatsoever. and we're quite confident that we'll continue to maintain this track record going forward. As far as disbursement is concerned, we have raised money of 10 crores this half, and we are confident that going forward, our effort to raise money through term loans, through NCDs, through securitization, through co-lending, we will be able to reach our budgeted numbers.
Okay, all the best. Thank you, Kalpesh. Thank you, Ashish ji.
Thank you. Thank you, Girish.
Thank you, Girish.
Thank you. Anyone who wishes to ask a question may press star and one on your touchtone phone now. A reminder to participants, if you wish to ask any question at this time, please press star and one on your touchtone phone now. To ask a question, participants may press star followed by one. Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Kalpesh Dave for closing comments. Over to you, sir.
Thank you, operator. On behalf of Star Housing Finance Limited, thank everybody for attending the earnings call. In case of any further queries that you might have, please do get in touch with our investor relations desk. Thank you and take care. Wish you a very happy and safe Diwali. Bye.
Thank you, sir. Ladies and gentlemen, thank you, sir. Ladies and gentlemen, on behalf of Star Housing Finance Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.
Thank you.